What's up? What's up? What's up, everybody? Will Simon here. I'm very, very excited to be bringing you guys this information here tonight. First off, coming out of Dallas, sheesh. You guys know the vibes, right? This is why we're here. This is why we're here. Okay. So first things first, I want to say thank you to each and every single one of you every single one of you guys investing your time into not only learning this strategy, but to implementing this too, because I see a lot of people, especially on London International Investment, especially like just learning in general, this strategy, it's going to require a lot of time. It's going to require a lot of effort. It's going to require a lot of dedication and a lot of discipline, because when you have something so simple to use and you're not actually doing it, it just kind of defeats the purpose of the whole thing, right? So before I jump into the strategy, which I have laid out here on my notes, so we can kind of streamline this whole thing so we don't have to go through all the hours and hours and hours of videos that I had to watch in order to perfect this strategy and in order to get this down to a science to where literally every single trade that I take is following these rules to a T. So that way you never waver, so that way you can be fearless in these markets. That way you can be fearless with your risk management and know where you're going and know what kind of goals to set and exactly how to achieve those goals. All right. So first things first, before I get into all that, I want to do some affirmations with you guys. The reason why is because the name of our company is I am. I am. Whatever you say after those two words, the most powerful two words in the human language, whatever you say after those two words is reality, is true. Whatever you say is true. That's why I listen to people like, Dr. Joe Dispenza, Dr. Bruce Lipton, Bob Proctor, Tony Robbins, like all these people who have achieved high, massive levels of success. They're the ones that are saying that you should speak to yourself in a different manner. So if you're actually doing that, it's going to change this whole way that you operate, and it's going to change this whole way that you live your life and your lifestyle afterwards, right? So I have my affirmations here. You don't have to repeat after me, but I highly recommend that you follow along with me saying this out loud, because it just puts you in a different state before we jump into the strategy and I blow your minds with the charts and the holy grail of trading, all right? Very excited. Okay. There is a limitless supply of energy, and it is mine. I release my need for financial security. I am financially independent. I am surrounded by loving, caring, giving, kind people. I release my need to feel needy. I have everything I want or need. I release my fear of wealth and wellness. I am wealthy and healthy and handsome and beautiful. I allow myself to prosper. I trust that I will create abundance. I have more than I need in all areas of life. I open myself to receive abundance from the universe. I release my need for financial debt. I am solvent. I am safe. I am secure. I enjoy a steady flow of positive, clairvoyant energy. I am loved, accepted, and acknowledged for who I deeply, truly am. I am appreciated. I am success. I freely express my creativity. I am always productive. I respect my abilities. I have creative insight. I always spend money wisely. And I am rewarded for all the work that I do. And that last one's really powerful too, because you are literally rewarded for all the work you do. All right, so let's get into this, guys. Price trap. Why is this such a great strategy? So for your notes, number one, price trap is duplicatable. Price trap is duplicatable. Price trap is not easy. It's actually quite complex. But when I break this down, you'll start to see and start to realize, hey, this is actually really easy. It's extremely simple, but doing this on a day-to-day basis with no wavering from your disciplines is going to be a very, very hard road to go down. I'm going to be honest with you guys. This is going to be a journey, right? So I'm going to share my screen, and I'm going to go through this with you. All right, I'm going to stop my video just so everybody can focus as well. Okay. So here we are. Okay. And I'm going to break this down as we go through this, just because when I'm breaking this down, I want everyone to realize a few things. Proper risk management. Proper risk management is not sexy to the new traders. Everybody wants to make that quick buck. Everyone wants to just, put a couple dollars in and make, thousands and thousands off of a few trades. But I'm gonna tell you right here, right now, that's not possible. I mean, it's possible. It's not sustainable. When Christopher Derrick was learning this strategy and was actually like in the trenches, mastering trading and mastering his strategy that he's taught myself and like hundreds of thousands of people worldwide as well. Chris Terry was always very upset with him when he would do massive flips. Like he would take small accounts and flip them to multiple 6, 7, or 5, 6, 7 figure accounts. The reason why is because, yeah, it looks flashy, yeah, it looks cool, but it's not sustainable for the long-term growth, right? Proper risk management is the whole key behind this strategy, right? The strategy, the drawing the boxes, the ceilings, the floors, the breakout, the retest, all that stuff that you learn is really, really easy. Getting this part right, the proper risk management, that's where everybody struggles. 0.1 per $100 in your trading brokerage account. Okay? So as another example, 0.2 per $200 in your trading account. Okay, pretty simple. For $1,000, it would be 0.10 per. And then as we continue to move up in lot size, 1.00 would be for 10,000. Okay, so it just goes on and on and on from there. But honestly, this is what I want to focus on: 0.01 per 100. The reason why is because once you get to a point where you can catch pips consistently and not be able to risk more than you're losing, that's where you're really going to be able to get this strategy off the ground and continually get better and get better and get better and get better. Okay, we know this isn't sexy, but it's sustainable for the long term. For how now your main goal when trading is going to be 1,000 pips per month. Now the reason why I say that is because if you accomplish the goal of catching 1,000 pips in 1 month, then you're doubling your account and doing the same thing month after month. You start off with $100 in your brokerage account, right? And you're risking 2 to 3%. You're only risking a 20 to 30 pip stop loss, which is literally going to be, if it's $100, it's going to be $2 or $3 that you're losing on that trade. Now, out of that $100, if you lose $2 or $3, is that a huge hit? Are you able to keep going and keep moving forward? Absolutely. Absolutely. So if you use a 30 pip stop loss for each and every single one of your trades, not only are you allowing the market to fluctuate and the market to breathe, but you're able to handle the drawdown if you're using proper risk management, which is 0.01 per 100, right? Next thing is that if a new customer joins, because this is a sharing platform, we're sharing this with other people so they can become customers and learn this same strategy for trading, because I think it's the most user-friendly interface. It's the most visual representation of how easy trading can really be. It doesn't take much effort. It's not backbreaking work, but all it requires is a few disciplines executed on a day-to-day basis, understanding proper risk management, and having a mentality for the long term. Right? Like Luke Longmire, creator of Gold Cup, which is why Price Trap is even able to exist right now. He said at convention in Dallas, he said that $40 to $500. I mean, that's pretty cool. But what's even better is $40 to $5 million over the next couple of years. I mean, think about it. How many people want to take small accounts and bring them up to millions of dollars. Pretty much everyone on here, I'm assuming. But at the end of the day, if we're not continuing to put ourselves in these positions to learn this and get this perfected without wavering and without putting standards on our low accounts, it's not going to validate any of the learning that you've done, and you can blow your whole account with one trade if you're not sticking to this. Okay. The reason why we use 0.01 per 100 is literally this, right? The newest customer will not be afraid if they lose a trade, if it's live accounts. If they have a $1 or a $2 loss or a $3 loss because it's $3 out of $100 that they started with, cool. If they get a trade and it takes off and it hits, take profit, and then they keep trailing their stop for, let's say, 100 pips, you just gained 30 plus 70 more pips. So you're literally gaining back that loss and continuing to build and grow your equity in your account. So that's why I'm asking, guys, who's really down to take this thing seriously? If I see a trading account that's not proper risk management, I'm going to know that you never went through this video. I'm going to know that you didn't go through the training on IM Academy, going through technical analysis, which Christopher Derrick created himself. And I'm also going to know that you don't see this as a long-term thing. For me, my family, my child, my children, they're going to understand the value of why their father took this so seriously and understood why this is so valuable, right? So for a loss, if you're losing 30 pips, you can understand why it's so valuable to risk 2 to 3% on a $100 account. If you're having $1,000 account and you risk 2 to 3%, that's $20 or $30. Is that a lot? No, because you have $1,000 in your account. That's still proper risk. That's still only 2 to 3%. Now, what's 2 to 3% of 100,000? That's $2,000 to $3,000 per stop loss. I mean, would you stress out if you had a negative $3,000 on a $100,000 account? I know I wouldn't, because there's still 97,000 more dollars in that account. But then if you catch 100 or 200 pips, you're making you're making $10,000 or $20,000 if you have $100,000 in your account. So, I mean, do you think that's a good day? Like, yeah, a lot of people will get this strategy and they'll take it and run with it and really go for it. And then they say, you know what, Will, like I did your price trap strategy and in the next month or two, I only made like, $100. I only made $200 off this. Like, how do I pay my bills with this? How do I live with this? How do I, supplement my current income with my job or whatever the case may be for you, right? But imagine having a day where you literally lose a trade, it hits your stop profit, which we're going to go into, and you still make $20,000 on a good day. Like if it's a bad day, you take one trade, you take it, goes 10 to 15 pips in profit, you put your stop profit in place, it hits your stop profit, you make $20,000. Who's ready for that? Because if you follow this is exactly where we're going, right? Like I said, 1,000 pips is a goal, and if you accomplish catching 1,000 pips per month, you are doubling your account monthly. So the first month is 100. The second month, if you double it, it's 200, right? Third is going to be 400, and so on and so on and so on and so on and so on. For the 12th month, you're looking at, let me get my calculator. Wow, absolutely incredible. Everybody see that? $409,600 after one whole year of doubling your account. Even if you literally don't do that and you only catch 500 pips per month, you'll still end up $204,800. Wow. Wow. Is it sexy now to use proper risk management? I mean, even if you missed 50% and you only won 25%, that's still going to be over six figures, $2,400. So you could literally suck. And I'm not saying this to target anybody, but I'm saying you could literally not win the majority of your trades. So every 4 trades you take, you only take profit on one of them, and that goes for 50 or 100 pips, whatever the case may be. You could win only like 1 out of 4 trades and still be profitable. The reason why I'm saying this is because if you're using proper risk, which is 0.01 per 100, then you're going to be able to sustain this for long term, so you can trade for however long, right? Next on the docket, you're risking 30 pips. So what is your risk? Everyone wants to know, how much are we risking? 30 pips on every single trade. So if anybody asks me what I use for a stop loss, I'm always going to say 30 pips. My stop loss is 30 pips on every single trade. Why? Because if you look at the previous history of all the markets, every single one of these moves is around 20 to 30 pips, right? But then, of course, there's other retracements that are bigger, longer, but the average amount of a move is going to be 30 to 50 pips, I'm going to say. So if you're risking 30 pips, it's not only allowing the market to move and breathe and fluctuate, but at the end of the day, it's 30 pips. Sometimes it doesn't go in drawdown, 12, 20, 10, 11 pips in drawdown, like in your negatives. But then it shoots back up into the direction you called. If you only had a 10 pip stop loss, you'd have been taken out of that trade. So that's why 30 pips is so key, right? Now, 5 wins and 5 losses in 1 week. Let's say, like, imagine this is the scenario. You take 10 trades, okay? 5 wins and 5 losses. Okay, 30 pips per trade equals 150 pips lost. And then let's say, I don't know, for example, average 50 pip take profit equals 250 pips won. Right? So what's 150 or 250 minus 150? So you still had a positive return on investment, which is so key, because that's why I'm saying, if you suck at trading, which I doubt anyone sucks in here, because if you're watching this video, you're directly connected to me and the Revolution Familia, so that means you're definitely a higher caliber trader. Okay, but I'm just giving you an example for the newer people that are joining and starting with IM to learn how to trade and to learn how to become profitable. I'm saying if they absolutely bomb it and only win 5 trades and they lose 5 trades, but they're only risking 30 per trade, 30 pips per trade, lose 150 pips, but they win those other 5 trades. And let's say, for example, it's a 50 pip take profit you're putting on your second order, and they win 5 of those trades. They win 250 pips. 250 pips minus 150 pips for the losses, it still equals. So you're still winning. You're still ahead. You're still able to profit off of this strategy, even if your win ratio is 50%. Okay, you still could make with you could still make like $100,000 if so. Let me give you this example. Okay? I want everyone to see the value and to see the long-term vision of this thing. Okay, on, let's say, for example, you have that's $10. Okay, or a 0.10, here I'm gonna write this down so 0.01, everyone should be using with $100. You'll still be able to catch and make $100 if you catch 100. Okay, so for the 100 pip profit, the positive return on investment, this is what you get, okay? Depending on the capital and equity of your account and the lot sizes that you're utilizing for yourself. For this 0.10, that means it's going to be $1 per pip. So literally 100 pips, it's going to be $100. Oh, whoops. Okay, for a 1.00, which is a standard, so that means it's $10 per pip, you're making $1,000. And standards, you can kind of do the math here, but I'm just going to put it there for you to see. I mean, if you can make $10,000 off of literally a 50% win ratio, sheesh. You know how powerful that is? My goodness, okay? So even if you lose 50% of your trades, you still could have made $10,000 with a $100,000 account in a weekly time frame. Remember, this is in 1 week. The example is this: 10 trades in 1 week. 5 losses, 30 pips per trade. Wins, 250 pips. 250 minus 150 is 100 pips. It's a positive investment, a return on investment, and boom, if you had 0.001s, you made $10. 0.10 is 100. Standards, 1,000. 10 standards, 10,000, and 100 standards. You can kind of do the math from there. So, sheesh. Even if you feel like you're struggling, and even if you feel depressed, here I'm gonna print this for her, like make this easy for you guys to see. Wow, that's a lot. Okay. Look at this. This is why I'm so excited about trading. Because if you can get this right here, everything else is going to be absolute gravy. Okay. So proper risk management. I'm going to go through this really quick. Proper risk management, 0.01 per 100. Okay. If the goal is 1,000 pips per month, you're only risking 2 to 3%. That means a 30 pip stop loss for every single trade. If you're accomplished catching 1,000 pips per month, you're doubling your account monthly. So the first month, 100, 200, so on and so forth. After the 12th month of doubling your account, consistently catching 1,000 pips, it's $409,600, almost $500,000 right there in 12 months, which is possible from a $100 account. Now, past results do not indicate future results, and results are not typical. It does require a lot of hard work, discipline, dedication, and commitment. But at the end of the day, if you're even only winning 50%, it's still $204,000. So it's still 6 figures. And even if you're only winning 25%, it's still $102,400. So every single risk is going to be 30 pips on every single trade. Okay, let's say you take, oh, I messed up on that. Let's say you take 10 trades in 1 week. You lose 5 of those trades and you win 5 of those trades. If you're sticking to these rules and using proper risk, which is 30 pip stop losses every single trade, you lose 30 pips per trade for 5 trades. That's 150 pips. Now, if you're winning, let's say, for example, 50 pips, take profit on each and every single one of the trades, the other 5 trades, you're literally winning 250 pips. Now, if you take away 250 from 100, or 150 from 250, that's 100 pips that you made from losing 5 trades and winning 5 trades. So it's still a positive return on investment. Now, for 100 pip profit, if you're using 0.10s, that's capturing $10,000 or $10 in the market. Now, remember, the goal is 1,000 pips per month. So if you're doing 100 pips per week, that's easily attainable. It's easily attainable. So that's why I'm saying, guys, like the last rule is every single time a trade goes 10 to 15 pips in profit, you want to, here, I'm going to take a picture of this too, so just so I have it. All right. go to notes. All right. I have a copy of this, so if you guys ever need it, I'll be able to give that to you. But same idea here, guys. The second and final last rule is this: each and every single here. I'll give you an example, okay? Because I want everyone to be visually. So this is one of the trades that was called out last week. New Zealand to the U.S. dollar. All right, we had price trapped in here, right? It broke this floor box and went back into the ceiling box. That was our entry. And watch this. You had a potential of 123 pips. Sheesh, guys, that's crazy. But the point I'm trying to make here is with stop losses, okay? This is the last and final rule. First rule is going to be 0.01 per 100, okay? The second rule I'm going to make, and that's part of the strategy, is this. You have a 30 pip stop loss from your entry. Okay, let's see, it's right there. Okay, so here's your 30 pip stop loss on your trade for it's a sell position. You literally, after this trade goes 10 to 15 pips in profit. So let's say you take the entry in the yellow circle. Let's say it goes 10 to 15 pips in profit. You're going to take your stop loss, and on your MetaTrader 4 app, you're going to put it 2 pips below the entry to secure that 2 pips. The reason why we make it 2 pips is because it accounts for the spread of the specific currency pair, and it also allows you to have all blues, so no losses, right? This is also going to make you literally feel safe, okay, when you trade, and it's also going to allow you to sleep, because a lot of people are like, yo, do you stay on the charts all the time? No, I don't. I have kids. I have other things going on. I have other commitments that I've made. And I'm sure every single person on this call does too. So if you're literally putting a 2 pip stop profit onto your trades, it gives you a feeling of security that no matter what, even if you win the trade and it continues in the direction that you called, that's an option. And then the other option is it's going to hit your 2 pip stop profit and you're going to gain 2 pips. So it's still technically a win. So you're either going to win or you're going to win big, right? If it goes 10 to 15 pips in profit, if it hits your stop loss, it hits your stop loss, no big deal. It's only 2 to 3%, like I said in the beginning, right? So that's why this strategy is so amazing. For a sell, it's going to be 2 pips below the entry. So let's say the entry's in the blue circle, and then or the yellow circle. And then let's say, for example, if you're taking a buy, you want to take your stop loss. If it's down here and you entered in the yellow circle, you put 30 pip stop loss. After it goes 10 to 15 pips in the upside, which is where you called, you want to put this above your entry 2 pips. Everyone get that? Does that make sense so far? So now that is settled, let's see. I want each and every single one of you guys to become a sound trader. The only reason why you would become a sound trader is if you have a sound mind. Having a sound mind is going to include sleeping, right? you can't be staying up all hours of night and just it's going to really clutter yourself up mentally. But if you declutter your mental capacity and you sleep a good cycle, it reduces the toxins out of your mind and especially your body as well, right? The next part I'm going to cover is twin trading, okay? This is literally on the rules in Price Trap. So I'm going to give you a visual representation of what this actually is. So when you go in here, it has this part right here. Rules, okay? Oh, what? Rules. 0.1 per 100. We went over that. That's proper risk. Sheesh, guys. I don't know. Hold on. Okay, yeah. There we go. This is the part I want to focus on right now. Rules. Because these are so valuable. But I want to bring your attention to the twin trade aspect of this whole thing, okay? When we're twin trading, it gives you more, it takes away the greed effect, okay? On the first order, you always put a 30 pip take profit, okay? So what you literally do is you go in here, and for example, on this trade, it was a short position or a sell. This is what your first order is going to look like. Let me make it perfect. Okay. Okay, so 30, 30. Boom. 30 pips take profit, 30 pips stop loss. Alright, cool. So what happened was it broke and it tapped back into that level, confirming that this was a sell position. We take the sell, 30 pips, stop loss, 30 pips, take profit. What happens is price drops, hits your take profit, takes you out of that order, boom, you secured 30 pips. But do you only want to catch 30 pips, or do you want to be able to capture this full move that just happened here? That's why we twin trade, okay? So the first order, twin trade, you catch that 30 pips, cool, you're good. You get your bag and you're out, all right? But the second order, you're literally pressing sell, sell, or buy, buy for each and every single one of these orders, utilizing, here's an example of twin trading. You have $1,000 in your account, you're using 0.05, 0.05, that equals 0.10. So it's still proper risk. It's still only 2 to 3%, but it's just broken down differently. If you have $100 in your account, still 0.01, 0.01. $200 in your account, 0.01, 0.01. Until you get to about $400 in your account, you want to put 0.02, 0.02, because that's going to equal 0.04, which is still proper risk management, 0.01 per 100, right? So if you twin trade, you're literally pressing sell, 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 or buy, buy. What happened here was we pressed sell, sell. For the first sell order, it's going to take you out at 30 pips. The second one, once it hits 30 pips on the first order, you literally take that stop loss, and then what do? We bring it about 2 pips underneath that entry. So not only are we risk-free, we already captured our 30 pips, but if in case the market does ever reverse and come back, it's going to hit that 2 pip stop profit. So we're going to have 2 wins instead of 1 win and 1 loss. Okay, and now for this example, did the market ever come back and hit our stop profit? No, it's continually to move. So for those 123 pips, 120 pips, you could have literally captured and rode that whole wave the whole way down. So that's why twin trading is so powerful. Next thing is take profits, okay? After every single one of these, you always want to put a stop profit of 2 pips after 10 to 15 pips, okay? And then 30 pips stop loss no matter what. This is from Price Chap. Literally, this is from literally the source. Yeah, this is where we're taking our trades from. Here, let me see what's going on. NZD CAD. This one's still active. Yeah, this one's good for Ench. I mean, I'm not going to call live trades out on here, but I'm just showing you guys as an example. Price was in here trapped, and now we're looking at something. We're looking at something, okay? But for the time being, I want to go through getting the greed effect out of the way. That's why we do 30 pip take profits in the first order. And then after you go 10 to 15 pips in profit, the second order, you put a 2 pip stop profit and you leave it alone unless you're trailing and bringing that stop loss and securing more and more and more. Here, I'll give you another example. Okay, so let's just say, for example, this is your stop loss. Okay, so you take the trade, you put it at 30 pips, goes 10 to 15 pips in profit, you bring it 2 pips underneath, cool, it keeps going, takes you out of the first order for 30 pips, you secured it, boom, bring that down to 30 pips, awesome, cool. Now, it keeps going down about another 50 pips. What you can do is follow structure and just keep following structure and keep lowering and lowering it. So that way if price ever did come back up, it's going to secure all of this instead of just only 2 pips. It's going to be securing a lot more than 2 pips, like 50 pips. So how good would it feel to know if you're following the trend and you're continuing to trail your stops, you're going to be capturing more of this piece of the market. It makes me feel awesome, right? So cool. Yeah, that's pretty much getting rid of the hope that it goes for more. But yeah, so those are the 3 main aspects of everything here, right? Killing this. So we've covered a lot pretty much. I don't want to like go too far. We went through the structure of price trap. We went through a scenario of profitability, and we went through proper risk management. Okay, so that's number 1. Proper risk management is 0.01 per 100. 1,000 pips is the goal. You're risking 2 to 3%. In profit, you move your stop loss above entry if it's a buy or below entry if it's a sell. So that way you secure those 2 pips and account for the spread. Let's see here. Yeah, even if you're losing 50%, you're still profitable. Twin trading we went over. And now what I want to teach you guys is the holy grail of trading. Okay? The holy grail of trading. The reason why Chris Verderick calls it that, excuse me, I'm still getting my voice back from Dallas from screaming about freedom. All right, okay, cool. But I'm going to go into this. The reason why Chris Verderick is such a good trader, and the reason why Chris Vertieri has been able to have the results that he has as well, is because he understands that there's a move, a correction, and then the real move. A move, a correction, and then the real move. Okay, what I would do, and what Chris Verderick did when he goes into becoming a better trader is you can go to literally youtube.com. A good one I go to is, like if I'm doing this back testing aspect, I go to Majestic Casual, literally click on it, play like the playlists, like the most recent one, like yeah, Worlds, whatever, any one of these, I would throw this music on, something that keeps you in a positive state. But what I've recently found to do wonders is this lo-fi. The reason why is because it keeps you in a peaceful state. It has high vibrational music in there. Silly YouTube. I hate YouTube ads. But yeah, so literally this is right here is absolute gold. This is absolute gold. Okay. It's awesome. I love it. This cattail swings. But yeah, okay, cool. So what happens is you play this music and then you go into the charts. Now, the reason why I do this is because it's the Kobe Bryant mentality. It's, I don't know if you guys know Kobe Bryant or like his background or anything like that, but he had a mentality that was like the Black Mamba mentality. So he literally practiced and put in so much work that before he literally would take so many shots before practice that he just was the best in the world at what he was doing and at his craft. Okay, so literally this is what I would do to get as good as Kobe Bryant is at basketball, but now we can apply that into trading, right? Kobe Bryant said this about basketball. He said the difference between great and mediocre is that most people, they only practice like maybe 1 to 2 times for like 1 to 2 hours per week. But if you think about how powerful it would be to play every single day for 1 year straight, at least 3 hours, my goodness. Do you think if you're doing this at least every single day for like 3 hours or 2 hours or 1 hour, or however much your schedule allows you to do you think that you would eventually get good at basketball? Or do you think you get eventually good at trading currencies and identifying good entry points and understanding market structure? It's inevitable. It is literally inevitable. So that's why I love this so much, okay? Now, all I would do is I'll grab this tool right here. I'll grab the circle tool while I'm listening to this music, and I will literally identify areas where it was best to enter the trades. Why am I doing this? Because once we can identify these trades, and identify these entries on an uptrend and understand why they actually work, it's going to give you such more insight on how you can actually like begin to start getting better at trading. How do we get better at trading? Christopher Terry said this himself. He said, in order to understand the future, you must understand the past. This is what I can do. Okay, you go to this line tool. I'll change the color. So you go to this line tool, and I like to click the stay in drawing mode because I don't like clicking off, clicking. But this is the way you do it. Just click there, click there, click there, click there, click there, and yeah. So I'll just start that for now. Why did I do that? Well, because it's a pattern. Okay, this is how you get really, really good at trading. You find out, okay, this was a ceiling. This came up, tapped off of it, came up, tapped off of it, broke through it, and then became a newfound level that it bounced off of. So it was a ceiling, and it broke through the ceiling, became a floor. Broke through the ceiling, became a floor. Broke through, tapped off the ceiling, broke through the ceiling, became a floor. Broke through the ceiling, consolidated a little bit, finally became a floor, right? Became a ceiling, broke through the ceiling, became a floor. Continued up. So this is how I'm saying, guys, you want to be trading in the trending market. You watch Christopher Derrick's replay the first day back from convention in Dallas. He literally goes into when you should trade, when you shouldn't trade, what markets you should trade, and when to stay out of the market and when to get in the market. Because if you're getting in the market when it's like stuff, this choppiness, you're not really going to be able to profit. But if you're like in these consolidate, here, look at this is perfect. Okay, cool. So watch this. Okay, we'll use red. All right, and then this. This is just a quick example. I could go more in depth on this at another date. But for right now, I just want you guys to understand that the difference between a trending market and the difference between a non-trending market. Okay, so I'll make this green. Okay, so this example right here is this. For a trade, you want to actually be in something that's going to be trending. Okay, if you guys are just joining right now, please mute your microphones, please. Thank you so much. If you watch and see these triangles that I just drew, the red one is a trending market, okay? You want to be trading in these markets right here because the odds of you catching, look at perfect example right here. I can show you that when you go in here, you can see, boom, perfect entry. It was a floor, it broke through the floor and then became a ceiling, and then boom, that would have been the difference maker of you catching all these pips because of this trend. If you're in this right here, this green one, this is a consolidating market. There's not too much going on in here. It's called indecision. The market literally does not know which way it wants to go. So you want to stay away from this and just, that's when you would trap price in this area and begin to see and find out when. So cool, we trap price. That was the ceiling. It broke out of the ceiling and became a floor and then continued to trend upwards. So that's why you want to stay away from the consolidating markets and only trade in these trending markets. Right? So back to the beginning though, this is what I would do and this is what I would recommend everyone do if they want to master this price trap strategy is literally go back, check in on these currency pairs. Like this is, for example, the New Zealand dollar versus the United States dollar. Highlight each and every single area where there was 0 to no drawdown because that's what the kind of entries we're looking for. So in order to understand these entries, in order to understand why these happened in the past, because look at this. This is January 4th, 2018. January 10th, January 12th, January 19th, 23rd, like this whole pretty much like 2-3 week period you'd have been in this trade. So people are like, oh yeah, like what trades are you in? Oh, like I'm in GJ, I'm in NU, I'm in AU, I'm in gold, I'm in Bitcoin. Like, oh, and then they ask me what kind of what trades are you in? I'm like, oh, I'm in NZD USD. And they're like, oh, that's it? I'm like, yeah. They're like, oh, okay, well, how long you been in? I'm like, 3 weeks. Like, it's just it's a different mentality when, like I said before, when we were talking about Kobe Bryant and how he approached basketball, how he approached becoming the best in the world at shooting free throws. It was absolutely incredible. It was absolutely incredible the way that he did that. So I just wanted to make that point. Literally go up to the front of the chart where you can't go anymore. On the uptrend, highlight every area that was the best entry for a trade, and then do that on a downtrend as well. And then do this over and over and over and over and over and over and over again. You'll start to notice things. Here, let me delete this. I can do this on a downtrend as well, just so that you can see the difference. Okay, take my tool, take the circle tool. From here, you can literally see. There's an area there. There's an area there. There's another one. There's another one. And finally this one. Okay. So like the reason why I did this and the reason why I'm showing you this is because all you're doing is taking lines and circles and identifying the best areas for entry. So one there, one there, one there, here, and here. Okay, so if you follow along with this cursor, if you can see this cursor, you see that there's a horizontal line and you also see that there's a vertical line. And when you move this anywhere you go, you can see on tradingview.com where this entry is. So I always look left to see which previous area it broke in order to find out where I'm going, right? So price came down, tapped off the floor, broke the floor, became a ceiling, right? Floor, 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 broke the floor, became a ceiling, right? Floor, broke through the floor, became a ceiling, dropped, broke through this floor and became a ceiling, broke through that floor, became a ceiling, and then continued for this downtrend. But if you're able to capture 1, 2, 3, 4, 5 entries, all securing 30 pips, sheesh, guys, that's 150 pips secured right there. Plus, if you're trailing, oh my goodness, it's game over. So that's why this is so powerful. I think that's pretty much it, guys. I mean, if you want to get good at trading, like Christopher Terry said, in order to understand the future, you must understand the past, right? Take that one to the bank. Take that one to the bank, because literally it's so easy. You would have to been able to enter into the market and actually execute trades. This is going to prove that the trading style works. Just try this. It's simple. If it's up, ceiling, floor. If it's down, it's floor, ceiling. So when something starts out consistently as a habit, it starts to become subconscious, and it will eventually become your identity, right? For example, hold on, what was it? I think a few days ago, one of our students caught 188 pips in 2 days. I know one of my friends, my good friends, my dear friends, won't say his name, but he caught 30, in 3.5 months, he caught 1,500 pips. Like, would you be upset with that? Like, no, you wouldn't, okay? So, and you can go through this too. Like, look at from here, this was a ceiling, and this is a floor. It broke the floor, became a ceiling, right? This is a floor, it broke the floor, became a ceiling, right? Floor, ceiling, ceiling, floor, floor. So now this became a ceiling. It broke the ceiling, became a floor, and then this floor, it broke the floor, became a ceiling. So it's just continuing on through this whole currency pair. And then once you have this one all marked up, and you keep going and you see, okay, look at this. So you mark that. All these entries. Every single one of these entries here. If you just continue to do this while with the music on, it's inevitability. Like I said before, if you're practicing basketball, free throw shots, 800 or 900 of them per day before practice, same thing. If you do this to 1 or 2 currency pairs, that's going to be a lot of entries. It's going to be a lot of chart time. It's going to be a lot of pips. So even if you took this entry right here, it's 148 pip potential. and 3 entries. So guaranteed 90 pips plus 148 pip potential. And that was only 1, 2, 3, 4, 5 days. It was only 1 week. If you're using proper risk management, you're going to be able to catch the 1,000 pips goal that we set out for ourselves. Okay, utilizing this strategy. Just draw over and over and over and over and over again. Okay, ceiling, floor, ceiling, floor, ceiling, floor, and then if the ceiling does not become a floor, do not enter. You're not going to be looking for a sell position if it doesn't show you that it broke the floor and is becoming a ceiling, if that makes sense. Okay, you want to look for a shift in momentum. It has to literally not become a floor and break that previous ceiling and become a new floor to become an uptrend. And same thing for the downtrend. So look at this. So this is a ceiling, broke the ceiling, became this is a floor, broke the floor, became a ceiling, broke the floor, became a ceiling, broke the floor, become a ceiling, broke the floor, became a ceiling. The floor down here, it did not break, it did not become a newfound ceiling. So why would we be looking for a sell position, right? We buy, then this is a ceiling. It broke the floor, became a ceiling, broke the floor, became a ceiling. Ceiling did not become a floor. Floor became a ceiling. Floor, ceiling, floor, ceiling, floor, ceiling. Floor did not become a ceiling, so it just goes up. This is so repetitive, and if you go over it a number of times, I challenge each and every single one of you guys that watch this and go through this to just take one currency pair, your favorite one, every single one, doesn't matter. Just going to show your level of commitment and do this. Mark up every single entry on the uptrend for a buy position, and then mark up every single entry for a sell on a down position. People see the glory of what other people have, but they do not literally see the grit of the actual grind that it takes to get to these high 6, 7, 8-figure marks. Okay, I am by no means saying that this is easy, but the way you get it is to actually draw it. It seems like it actually is. Like if people say, yo, Will, like what about Fibonacci, and what about like, stochastics, and what about like these other indicators and all these other strategies? I'm like, yeah, I try to stay away from it. Like me personally, I don't think that these other lines, they look cool. Like for example, if I see another chart and it just looks hectic and there's just too many trend lines and there's too many things going on, it's not clean, it's not polished, it's not really like a minimal look, it's not easy to explain to a 10-year-old, I try to stay away from it, because trading is not about drawing. It's not just about drawing, it's about managing. It's about mastering your disciplines. That's why a lot of people get lost in the sauce. They think that this thing is easy, and then they're going to learn trading in a few months and then become rich and be able to throw massive lot sizes on their trades because they could just predict the market. That's impossible. You can't predict the market. All we do is literally draw floors and ceilings, and we wait for price to reveal itself. So this is a floor, a floor, a floor, just by using one line here. A floor, a floor, a floor, a floor, breaks the floor, becomes a ceiling, entry, boom. That's how simple it was, okay? That's how simple it was. And then here too. Comes all the way down, floor, breaks the floor, comes back up, retests as a newfound ceiling. Then what you also can do is go on the 15-minute time frame and see, excuse me, you can see this is a floor. It breaks the floor on the 15-minute time frame and then retests back up into that zone. So now what we could do is introduce zones. I'm just literally drawing another line. This is also on the 15-minute time frame, so this is why I'm saying you take entries off of this. So if you're looking for a retest, you see that this went in the floor zone or the floor box, okay? It broke through the floor box. It came back up into the ceiling box. That was your entry. That was it. If you take that trade, it goes 10 to 15 pips in profit. Your 2 pip stop profit, and then after 30 pips, it takes you out of the first order, and then boom. What happens is you have a 2 pip stop profit on one order that could be continually go down to another 2, 3, 4, 500 pips. That's our goal of catching 1,000 pips per month. If you catch 200, 300 pips a week, I mean, it's totally duplicatable and sustainable and achievable. A lot of people are like, oh, I can't do this. I can't do this. Trading's too hard. Trading's too this. Trading's too that. I think it's just the way that you perceive it. Like, this strategy is so easy to master. You just go in and you track price and you wait for a breakout and a retest. The number one key confirmation of getting into a trade is the retest. If there's no retest, there's no entry. If it doesn't come back up into the area, see, like, this is a good example right here. Breaks the floor, becomes a ceiling. This is a newfound ceiling. It broke the ceiling. Did it come back up to retest as a floor? No, we were about, I don't know, 10 to 20 pips off. So will we enter on that trade? The answer? No. No, we do not enter. Because it does not, it violates our rules of having a retest like it does over here. This is a clear retest back up to that level. And then if this is a floor zone and it breaks the floor zone, I would expect it to come back into this zone, which it did not. So if there's no retest, there's no entry, right? Yeah, like, it's easy to understand. Another key side point I want to make is that it's easy to identify these ceilings and floors, but it's very hard to understand when to protect your account. The hard part will be when you over leverage and price will drop all the way down, take you out of the trade, and then go into the direction that you wanted to go in the first place, right? So you're down 20 pips, you're up 75 pips, you're down $12, you're up $66. Minus 8 pips gain to gain 108. Like, it's about the drawdown. It's the risk to reward ratio. It's the key to this whole thing. It's just going to get better. You're going to get better at technicals, and you're going to get better at mastering the rules, which, if we go into price trap, it's on every single pair. It's on every single pair right here, the rules. And even if you move them, they go right back to where they're supposed to be, which is cool. I like that. But the rules are there. If you follow the rules and you continually draw on these charts, that's where you're going to begin to master wealth and master obtaining these pips, because it's not about making money in the markets. One of my good friends said this to me the other day. It's not about gaining money in your brokerage account. It's about the art of catching pips. If you're able to capture a certain piece of the market, that's when you're able to actually go forward and create sustainable wealth for a long term, for however long. Right? Once you know the rules and know how to draw, you'll know how to do in real-time price action, because you've drawn it so many times from going back and catching these entries and looking at these entries that have previously happened. Now you know what to look for. Now you know where to sell and where to buy. You're just waiting for the retest. That's why it's called price trap, because when you go in here for this currency pair, from all that back testing and all those areas that you're looking for, here's what I would do. I would literally make a ceiling zone right here, floor zone right here. And why I draw these boxes is not to look cool, and it's not to just waste time. It's just a visual representation of these zones, because if you have a floor or a ceiling, it's about vicinity. It's about vicinity. So every one of these trades isn't going to go perfect and hit your zone perfectly. So that's why we have at least a zone to your wick, to the body of the candle, to account for where this price could go into. So let's say, for example, on this trade, we have price break this floor and come back up and retest back into the ceiling and then drop. That would be the entry right there. But then on the other side as well, I always draw this out too, because if it just taps off this level and continues to move to the upside, we're going to be the first people that capitalize on this shift in momentum. That's why it's in price trap here, it's called a shift in momentum. If price does in fact shift up to the upside, we're going to be the ones to capture these moves. If you're getting ahead of the trend, that's the name of the game. Observe the masses and do the opposite. While everybody's focused on the sells, You could be waiting patiently here for a break and a retest to the upside and be able to first one to catch all those pips on the upside. That's it. How simple was that? Okay, look at this. If you see price moving below and closing out below this zone, this box, this floor box, breaks through it, closes, moves back towards this floor box, and then drops, that's confirmation in this yellow circle that it's becoming a newfound ceiling. Breaks the floor, becomes a ceiling, press sell, 30 pips stop loss, 30 pip take profit, and then the second order, 30 pip stop loss, no take profit. Boom, you let it go, hits your 30 pip take profit. After 10 to 15 pips, you put a 2 pip stop profit in place, and then boom, you're in business. Boom, you literally caught pips. And that's why with the track record of this whole thing, oh my goodness, a lot of people are actually winning and paying for a lot of things with this strategy. Not just Christopher Derrick, but a lot of people on the team. So that's why it's called price trap, because all you're doing is you're trapping price in between this previous level of a ceiling and this newfound level of a floor and waiting for price to reveal itself. We do not predict price. We do not react to it. We literally wait for price to react off of these areas, and then we respond to how price reacts to these boxes and these zones. That's it. That's how simple it is, okay? If you can't master price trap or anything like that, you're not able to master anything else either, okay? How to have the mentality of a successful trader, you have to have no ego in this whole thing. Why trade this way? It's to search for and find high probability trade setups, okay? Nothing ever changes with the style of trading. Literally, Christopher Derrick, every single London session is going to go through and go over this strategy to a T. He's the top educator of our IM Mastery Academy platform, okay? He's the one that literally changed the way a lot of people trade, including myself. The only thing that we need to apply is the repetition of us practicing it daily, 365 days, right? I used to think the answers were in everything else. I used to think if I read this one book, oh, Trading in the Zone, I'm going to read this book, I'm going to get better at trading. I used to think that, oh, the answers were in just, you know, asking other people or taking signals or doing all this other stuff. But no, it's actually getting down to the nitty gritty, getting onto your laptop, getting onto your phone, identifying zones, identifying buys and sells previously that have already happened, and drawing out why. Once you do that, you're able to trap price, wait for a break, wait for a retest, 15-minute, go down, watch it close below or close above, and then boom, enter, fearless, let's go. Okay? Excuse me. I used to think the answers were in everything else. The whole time the answers were just in practicing. The whole time the answers were just in practicing all the time, 24/7, until it got to a point where it was like just super easy to trade. Okay? Go get blank charts, mark them up, go in the back, go in the past, back test. All you wait for is things to happen, and then they do. If I'm going to wait for a break of certain levels and a retest is all I need to trade successfully, I don't need anything else. That's why I said it before. I don't need any indicators. I don't need any, you know, like other strategies or anything else. If you want to draw up how you want the trade to go and it doesn't go that way, and then you quit trading because, oh, it didn't hit my trend line and it didn't bounce the way I wanted it to bounce off the trend line, so now trading's a scam, well, then that's just kind of a small mind, a small mentality of the bigger picture of this $6.6 trillion a day market. We're a part of a bigger movement here, people, you know, ladies, gentlemen. I think based on the information that was released not only in Dallas, but where we're headed with London, everybody that wants to learn and duplicate and teach people how to trade, this is going to be the best way to go, because it's so simple. Okay, if you're strict with your confirmations and if you're absolutely insane with your rules and you never waver, people are like, yo, how did you know that trade was going to happen? Well, the truth is I didn't. I just knew that it broke the floor and it came back up to retest, and then I pressed sell, and then I used proper risk, and then I caught 179 pips. Cool. That's it. Sometimes the best trade to do is the one that you didn't take at all. Just because you didn't risk anything in your account, you're considering it a win. if it doesn't do a retest and you don't enter, that's a win because you still protected your account. You're not losing anything. Okay. All you really need is the basic concept of understanding where price is moving to. So just because the markets are open doesn't mean that you have to trade at any given time. That's another key tip. And as I finish and close this thing out, the thing that's stopping every single person from having massive success in not only trading, but in life in general is a lack of patience. It's a lack of understanding when and where to enter into the trade or to start that new business or to talk to that new person or to, step out of your comfort zone or to do something wild or to do something, whatever the case may be for you. Okay. This is how you should be thinking when you're trading. I'm going to let price react any way that it will, so that way I can respond, and based off of the candles that are being printed, I'll know what to do. That's how you should think about this. I'm going to let price react off of this floor zone or off of this ceiling zone, and then based off the candles that are printed off that zone, that's when I'm going to be able to actually make my decision whether I'm going to buy or whether I'm going to sell, or whether I'm going to be patient and just wait. Okay. The best thing to do during downtime is to study. Go back into a currency pair, mark up all the entries, go through the whole currency pair, and then do that to every single currency pair, and then boom, do that whole cycle all over again. And then your repetition, the fact that you're repeating the same thing over and over and over and over and over and over and over again is going to be your identity. It's going to actually be your reputation. Be like, yo, man, you practice price traps so much. And now when you get on the charts and I see you trade in real life, it's just like you literally don't even have to look at the charts. You can just like literally identify where the price is at and identify how it got there. Like, my goodness, this whole thing is so amazing. Okay, I feel blessed and happy to be happy to be a part of this and giving you all this information. You can trade pretty much every single day, only if you go through all the charts and find the ones that are ready, and whichever ones has the best confirmations. You take the position, buy or sell, always go through the academy, because it's the mastery academy. You go through technical analysis, you learn the strategy, you watch this video over and over and over again. You ask me, you ask anybody who knows this strategy for tips, tricks, advice, comments, concerns, questions. I will always be happy to help each and every single person that wants to learn the strategy and really get it down, right? This company, I'm going to go into a little bit. I'm going to end it there, because at the end of the day, if you want to learn this, it's all laid out for you right here. Okay. So I hope each and every single one of you guys got value from that. Just a basic breakdown as well. When you're going through and making trades, you take your risk, your 0.01, you twin trade. You always, after 10 to 15 pips in profit, you put a 2-pip stop profit in your entries, and then you trail your other entry. So it just eliminates the greed effect, and it allows you to trade for however long. Let's say people want to trade for 10 years, 20 years, however long you're able to trade for that. So once again, this is Ambassador Will Simon for Price Trap. I appreciate each and every single one of you guys. I hope you guys took notes. I hope you guys got a lot of nuggets, a lot of value on this. Let me know if I did a good job, and let's continue to trap price and to the moon we go, guys. Have a wonderful rest of your night.